All right, what will go on with these disruptions we're getting at Port Arthur, some of these others, the Colonial Pipeline, another one? I mean, bottom line, one after another shut down, stymied for what could be quite a while. What's the fallout?
Well, so right now about 31% of the refining industry has been affected, and if the refineries aren't running, we don't have the products to put in the pipelines. And all the different geographic regions of the country are connected. So if we look at Houston and Port Arthur, first of all, we're supplying markets in Dallas, St. Louis, and Chicago. One of the major pipelines up that way is shutting down this afternoon because there's no product to pump. Colonial Pipeline is shut down out of Houston because there's no product to pump, and that pipeline is servicing the Southeast and the Mid-Atlantic.
And a lot of different energy products over that,
exactly,
right? Including jet fuel.
Right. So we've talked a lot about gasoline, but if the refineries are not making jet fuel and you're thinking about how does Atlanta get its jet fuel, it's coming from the Gulf Coast. So there's going to be an issue happening in a variety of airports as this outage extends.
That planes can't get fuel.
Well, exactly, or they're going to have to get them from somewhere else.
All right. The effect right now has been gasoline futures climbing, I think, 12% over the last week. Do you see that continuing?
Well, I do, especially over the next few days, because the market is still trying to assess what's going on. And as you mentioned, the Port Arthur refineries are now all down. That's right. Another 8% of refining capacity. And it looks like there's significant flooding that's occurring at those sites, whereas in Houston, they just shut down because they couldn't get crude. So we don't have really much damage in the Houston area nor in Corpus.
All right, but the flooding and the damage that does means it's longer to get it back up online, right?
Well, exactly. You get those electric pumps submerged underwater and you're down for 6 to 8 weeks.
Why isn't oil corresponding with what's happening in gas and that sort of stuff?
Well, here's the way to think about it is we just lost about 5 million barrels a day of refining capacity, and the amount of oil that was taken off the market was closer to 600,000 barrels a day. So while we lost a little bit of oil, we lost a huge amount of demand, and that's why you're seeing the oil market coming under pressure.
All right, but there was a lot of oil to begin with, right? And so the argument was that we were kind of already saturated, maybe a little less saturated now, right?
Well, yeah, exactly. I mean, well, we have actually more oil. It's all stacking up.
But the bigger hit, I'm sorry I wasn't clear, Andy, the bigger hit will be in gasoline. So if people haven't seen it already, they will see it, right?
Oh, they will. I expect that gasoline prices are going to march up nationally about 3 cents a gallon per day over the next 5 to 7 days.
Really?
Yes, as the retail side has not absorbed all these increases that we've seen in the pipeline barrels that we trade, which have already spiked 20 to 30 cents a gallon.
You know, I don't know if this is your purview, but curious, because a lot of people email me from that neck of the woods and in the South saying that there's price gouging going on. How is that policed beyond the normal uptick in prices you would expect? Some are saying they're seeing 30, 40, 50 cents more a gallon. How does that happen?
Well, I think we have to rely on the consumer, and a lot of these service stations, even though they might say Exxon or Shell or BP, they're not owned by the major oil companies. It's a dealer type of relationship. So that individual gas station owner is posting those prices, and that's where you could see some gouging take place.
All right. There are laws in effect for that sort of thing, but if you see that, obviously drive on and see if you can find a better deal elsewhere. But